Welcome to Short View Trading. It's Monday, 4th of December, around 9 a.m. London time. What matters today for markets? And in particular, if you're a trader of US equity index futures, whether it's the NASDAQ or the S&P or perhaps the DAX, on a 1 to 2 week time frame, what should you be thinking about and focusing on? That's the purpose of this clip. Do like and subscribe. We'll send it to you as and when it comes out. What a dramatic move we've had in markets this past week, particularly on the back of those dovish comments from various Fed presidents talking about weaker inflation and in some cases talking about the risk of keeping policy too tight for too long. And as a result of that, reflecting that, we had some pretty dramatic moves in the rates market. You can see that on this chart. The rates market moved pretty dramatically, pricing in about an extra 50 bips of cuts for next year in the space of just this past week. And consistent with that, US Treasury yields fell pretty sharply at the front end. 2-year yields are now below their 200-day, while 10-year yields have also broken down. They've also moved below their 200-day moving average. So liquidity loosened, the dollar was weak, and some of the key liquidity sensitive asset prices were strong, including Bitcoin and gold futures, as you can see on this chart, which pushed out to a new record high last Friday. And consistent with all of that, the price action in the S&P 500 index was reasonably robust. You can see that from this chart on your screen now. It consolidated its gains in late November at around its highs from early September, and then you can see it pushed higher last Thursday and particularly last Friday. Interestingly, that strength hasn't been led by the Magnificent Seven, which have traded sideways, or down in the case of Nvidia, which has struggled since reporting its Q3 earnings a couple of weeks ago. Instead, the rally's been led by cyclical parts of the market. Transport stocks, for example, have been strong, while as you can see on this chart, the Dow Jones Industrial Averages index has been accelerating higher. All of which, of course, begs a number of questions. Is a leadership switch underway in the US equity market? Why isn't tech rallying on lower bond yields? Should we be buying this equity market? Well, we answer all of that in our daily publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity index futures. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name, email address, and we'll send you our daily trading publication free for the next few weeks. So what gives us an edge as we make these calls on markets? Well, it's indicators like this one you see on your screen now. This is our short-term risk appetite model designed to pick key turning points in equity markets on a 1 to 2 week horizon. Encouragingly for the bulls, as equities have consolidated their gains in recent weeks, this model's been unwinding its sell message from mid-November, which is usually a bullish signal. So what's the message about other short-term models and how are we trading this market? We'll have a look at today's daily publication for detail on all of that. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.